And joining me now is Marko Papic, BCA Research Chief Strategist. Marko, good to see you again. So the president has worked to project strength here and say countries are lining up to make deals. But so far outside of the UK, we haven't seen much. How are international markets reacting here, and how does China factor in?
Well, I mean, international markets have absolutely crushed performance since January. There's been a little bit of an ebbing of performance over the last several weeks, and I think that's to be expected. And I think that there will be turbulence. Not all countries are going to line up and be successful. I think that myself and pretty much every commentator out there is guessing that Europe is likely to bear the brunt of President Trump's ire in terms of slow walking on negotiations. Then there's others where there appears to be a real positive momentum, like India. You know, Secretary Lutnick actually made some pretty positive comments on India last couple of days. So it's a mixed bag, and I think investors should expect more volatility over the next several weeks. At the same time, we've seen President Trump already decide to delay onerous tax, to delay very harsh tactics, and I think that will continue.
It looks to me like Europe is caught a bit between a rock and a hard place in the sense that they've got a rare earths problem with China. At the same time, China very much doesn't want President Trump to successfully isolate China, which would, I guess, of course, involve the EU. So how do they do that dance, dealing with the rare earths issue in China while also not making things worse with President Trump?
Well, actually, the danger there is not to Europe. In fact, there is a huge benefit to China if it were actually to take it easy on European car manufacturers and punish and isolate American ones. So that story has not been written yet. You know, we got to see where the U.S.-China negotiations go. Ultimately, I think the fact that we went down from triple-digit tariffs down to double-digit, back to 30% level, I think that indicates effectively that the U.S. does not really have a pain tolerance for a prolonged trade war. And when I say the U.S., I mean the administration, I mean corporates, I mean voters, households. Whereas the risk to President Trump is that China has proven over the past 5 years that their pain tolerance is much higher. I mean, let's not forget the zero COVID policy that Beijing imposed on the country, probably 18 months too long. And so there's not really any evidence, to me at least, that in a confrontation over trade and economic pain, the U.S. can actually win.
Okay. Well, why are you recommending that investors buy European telcos?
Well, I think that's one of the ways to sort of hide through this turbulence. European telcos are completely domestically oriented. They're not trying to sell really anything to the U.S. There's no real trade here. Some European telcos own American operators, but that's a different kind of a relationship. So the reason that they're interesting is that they're defensive in nature. They're not exposed to globalization. And Europe, as a result of very aggressive U.S. tactics and Chinese industrial overproduction, Europe is actually starting to finally take structural reforms in its single market seriously. And so telcos could be a huge beneficiary of this.